Good morning, and thank you for joining us today for the Toubani Resources Investor Webinar. Today, we're joined by Toubani's CEO and Managing Director, Phil Russo, who will provide an update on the Kibata Gold Project located in West Africa and present to the recently lodged investor presentation. With that said, Phil, I'll hand over to you.
Thanks, Jane, and thanks everyone for joining us. I know it's a busy morning out there and we won't take up too much of your time. I wanted to have this webinar for three reasons this morning. One, to update the market on what we've been working on since I joined the company 5 or 6 weeks ago. Briefly go through our investor deck to existing, new and potential investors on the call. And thirdly, just alert the market to the status of our drilling campaign, where we're expecting results to start to flow through in a couple of weeks and the drill program complete within essentially 2 months. So there's some rapid news flow ahead. And so for those three reasons, I thought it was timely to give a short update on where Toubani is at this morning. So again, thanks for joining us. Before we get into the investor deck, since joining the company, like I said, 5 or 6 weeks ago, we've been very active. Within a few days of joining, we bolstered our technical team with some strong geological appointments, Bill Oliver and Kerry Griffin, and I'll talk a bit more about that in a minute. Immediately, once we joined the company, we put our fingerprints on our exploration program, and again, I'll talk about that strategy in the coming slides. I also visited site, and I'll talk about my takeaways from that. But in short, I was pleasantly surprised at the potential of the Kibata project, and it really is a project flying under the radar for reasons I can't discern and we'll get into. And so that strategy is here today. We call it Grow, Optimize, Develop. I want to focus on grow today. This is the strategy essentially in the near term, and we'll get right into it. So why Toubani? Just as a refresher for people on the call. This is a strategic asset. This isn't an orphaned gold project. It is a project of size, 3.1 million ounces. It's in one big 4.5 kilometre long pit. And again, as we'll talk about in a momentarily, it has the potential to get significantly bigger. Oxide resource growth, we're going to talk about that a lot today. It is the strategy of the company to delineate more oxide resources across our land package. And I'll show you how we're going to try and do that. But there's two ways to win on that oxide. We have 700,000 ounces of oxide not in reserve that we're focused on, but in the near term, we're immediately focused on delineating new oxide resources. And we're doing all that to improve the base case DFS that was put out a year ago. So we have a 100,000 ounce a year project, but I think, and again, we'll step through this. We think that there's something bigger on offer here for our shareholders. We think we can push something closer to 150,000 ounces a year of an oxide project. And again, the oxides will be the flavour of the day, but there's a reason for that, and that is because it's cheap mining, it's cheap processing, it's lower capital, and it reduces your technical risk. And so that's bang on strategy for us. Corporate activity, in the last 2 years in West Africa, there has been a heightened level of activity in terms of corporate acquisitions, but also in projects being built. So we're really happy with where we're located. It's the right spot. It's a hot spot for activity. So we're ideally placed there. Like I mentioned in the onset, the technical team has been strengthened at Toubani, and with our board and the management team, we've got a really the right team to advance this asset. So the right people and the right asset, very important to execute an outcome here. And lastly, and I know you'll hear this from many resource companies, our valuation is compelling. I might argue that we may be the most mispriced resource name out there. And again, after hearing the potential of the asset and our exploration, hopefully you agree. But that's the job of the management team and board right now, is to get that valuation up. Just quickly on our structure, since the ASX listing, we're 100 million shares out, 20 or so million options and warrants. We're all priced significantly higher today. I do want to highlight that for a company of our size, we have a large institutional ownership to which to build on, and those institutions see the strategic potential of this Kavada asset, and so we thank them for their support. But clearly, it's a vote of confidence in the project. Like I mentioned, the team. This is Bill Oliver and Kerry Griffin. If I can introduce them to our shareholders and potential shareholders. Very strong, 25-year experience in West Africa. They know this type of geology. They know resource development, and they know how to unlock dormant exploration potential. So we're very fortunate to have them part of the team, and with the board. It's a very accomplished, well-rounded team to bring this asset forward. So I'm excited about the group we've got together here. So on strategies, we call it grow, optimize, develop. We're focused on grow. And again, it's about the exploration of areas where we don't have resources. And again, we'll step through that. $5 an ounce is where we trade today. Our peers are at $30 an ounce. And again, I'll talk about how we're going to try and bridge that gap in the coming months. Just quickly on where we are, we're in the right place in Mali, about 2 hours drive from Bamako, sealed road, essentially the whole way. It was a very smooth trip in terms of getting from Bamako and to the site. And immediately around us, we have 5 villages, all very supportive of the project, all would like to see it built. So, locally we have enjoyed strong support. Regionally, we're in the right part of the country. And so, very happy about that. We don't have any expats on site. We just have a strong Malayan team who've been there for some time. Our infrastructure is, very, very good. All part of being able to advance this project forward. So, I was excited about that. Just on this slide, there's a few boxes here, but the message I'm trying to convey here is there's not many assets out there in the market that can tick this many boxes in terms of scale. And I'm talking 3.1 million ounces, 1.2 million ounces of reserves, 75% of them in oxides. That's, again, these are things that are hard to find in the gold space, but I do want to focus in on grade and oxides. And this is all about creating or bolstering this project to become even more simpler, but also rising to the top versus other projects that we're competing with. And with that, I'll get straight into it. So the main deposit is Kavada. It's 4.5 kilometers long. The scale is kind of breathtaking. It's the artisanal workings across this whole deposit are extensive. That's in the past. They're no longer there, but it does show you that with 150,000 meters of drilling below this pit, that there is a lot of gold here. We do badge this at the moment at a 0.35 cutoff, and you see there 3.1 million ounces at around a gram. What's important to highlight here is, and it's shown there in the red, is at a 1 gram cutoff, the ounces and grade in this deposit are significantly, the grade is significantly improved. It's almost double the grade for 2/3 the ounces at a 1 gram cutoff. And I think that is really misunderstood in the market in terms of the optionality that the Kavada project has. The average depth of this deposit is 110 meters. And so it's all open at depths. And that's when we start to hit the fresh around 150-ish meters or 100 to 150 meters down is where we typically start to see the fresh material. But what's unique about Kavada is our average oxide depth is nearly 70 meters. Ore Zone, for instance, appear doing well in Burkina Faso. Their average oxide depth is 35 meters. So unique to Kavada is that the weathering profile does extend quite deep, and that is all favourable in terms of delineating a project here with strong economics. And that is why we're focused on the oxides, is in terms of how deep this weathering profile does extend across this land package. And it's something we're really excited about and focused on. But again, I think these are things misunderstood in the market, and that is there is a high-grade component to Kibata that we're going to be doing more work on in terms of presenting that in the market, but also the oxides and the depth of the weathering profile. And that means shallower pits and lower stripping profiles. Straight into the exploration. So like I mentioned from the onset, we had a 10,000 metre program underway from the listing. We are that in the coming weeks, we'll start to see the first results come out from Kibata, and we're really focused on numbers 3 and 4 in that chart image on the right-hand side. That's Kibata North. We'll talk about that, but there's a couple of Ks of strike we're trying to extend from the main pit. We do have some early drilling at number 6 there that will also be due out in the next few weeks. But like I said, we're going to complete this program really rapidly from here over the next sort of 6-7 weeks, and assays should all be in essentially within 2 or so months. So we're going to see regular drilling news flow from this point. And I just wanted to highlight where these drill holes are going to be coming from and what they're going to mean when you do see them come out. So this is Gosso. This is 6 kilometres from the main Kibata shear, where all the historical drilling essentially taken place. On Gosso here, you see these grey outlines. They're the artisanal workings. What I learned from the site visit is that these artisanals, sometime over the last few years, they weren't there in a large way when I was there, are starting to join those pits up together. We're not starting from scratch here. There's already 36 metres of 1.6 here. We've got no resource on here, like I said, but our program will be moving here in the coming weeks. We'll be running the drill rigs across these artisanal workings, which at Kibata are a really good indicator of where there's a potential for mineralisation at depth. So we're really encouraged to see what was happening here, as it was lying dormant for the last few years, but these guys have now started to join these pits together, but again, largely untested for some time. So there is another 2.5 kilometres of strike here on offer if we can have some success with the drill bit. 10 Ks from the main pit is Kibata Est. Late last year, again, this is underappreciated by the market, 21 grams per tonne over 8 metres in an auger hole, shallow auger hole. We are, again, the rig after going to Gosso will go here, and in its we've got a few holes planned here to see if we can see what's happening at depth. But again, we've got 0 RC holes here. It's all auger holes, and this is coming up over the coming weeks as well. This would be a new frontier for mineralisation at Kibata. Artisanals are also active on this package, both on the structure and off the structure, which again is something that was somewhat of a surprise to us following the site visit. And then the last set of targets in this round of drilling is Kibata North and Kibata West. The rig is at Kibata North as we speak. You can see there, it's 2.3 kilometres of strike we're aiming for here. And these holes 8 and 9 are testing it around that number 2 is depicted on that image. Again, we've got no testing. The blue dots there at the extent of the drilling that forms within the Kibata main pit. But we are going to see what's happening there. And again, artisanal workings. And then just to the west of it, we call it Kibata West. We've got 1.3 kilometres of artisanal workings going on, but no drilling at all. And these are some of the, I guess, modest tweaks to the program that we made with the new technical team coming on. We shallowed the drilling, if you want to call it that, and spaced it out. We're not looking for resource definition from the onset. We want to snag new areas of mineralisation to show the market that this land package is actually very prospective and untapped. And so these are coming over the coming weeks, and it should be regular news flow on this front for the next couple of months. I should highlight that this is not just an isolated land package that has some exploration activity. This is a hotspot. We have activity either side of us with two other companies. It's clearly a prospective area. They've all got projects they're advancing with the drill pit and with studies. And so clearly we hold the largest land package in in this belt. We control most of the structures. We've got the biggest resource, so we're well placed in this region. But it isn't just an isolated land package. It is a bigger play here that is highly prospective, and it is important to highlight that we're part of a much larger system. Why are we doing all this oxide drilling, if I can call it that, is to improve the base case DFS. So we have a strong 8 years of oxide production, 100,000 ounces a year for 7 or 8 years, but we want to go for something closer to 150,000 ounces a year. And like I alluded to at the beginning when we talked about the high-grade component of that Toubani pit, so we've got more resources. You can grade stream this to improve the economics markedly. We can make it shallower pits, lower that strip profile. So costs will improve, CapEx will improve, a host of wins by focusing on a predominantly oxide project for a strong 10 years at closer to 150,000 ounces a year. That's the goal, and we're going to see what the drill bit delivers. But this isn't part of our near-term plan, but just to give you context of why we're focusing on what we're focusing on. Yeah, oxide mining, again, there's a track record. This is a tried and tested strategy in West Africa. There are several big mines that began in the oxide projects and then they move on to sulfide projects. We do have a large sulfide component, 1.5 million ounces is there. But for our market cap and our budget and for our strategy, the win for us, the low-hanging fruit, is on the oxide strategy. It's near surface, it's shallow, it's cheaper to drill, but we have the same rocks to Sagiri. So in terms of the potential here, we just need to keep the rigs turning, and we think we will yield results. But starting off as an oxide project and transitioning into sulfide is a tried and tested way to produce gold in West Africa. Just the last couple of slides here. So just this sort of speaks obviously here. There's a large disconnect in the market in terms of where Toubani trades versus our peers. There is no technical reason for that. There's no fundamental reason for that. And hopefully, as we grow the profile here and have some results on the drilling front, that gap will bridge. That's certainly my takeaway from the site visit and my due diligence before joining. There's no reason for it to be where it is. And I think as we highlight the strategic nature of this asset, its standalone potential to be something bigger than 3.1 million ounces, that gap is going to close. And I'll just conclude, last slide here before handing it back to Jane. Our investment case, it's grow, optimise, develop. We are focused on the growth part here. And like I said at the beginning, new oxides, as well as converting that 700,000 ounces of oxides that we currently have. We have 900,000 ounces of oxide today. We're looking to try and essentially double that sort of level over the not just this drilling campaign, but over the next 12 to 24 months. And with that, we're going to have an approved project that sort of rises to the top versus peer projects out there. And then we'll see where it goes in terms of development. But the value proposition is really, really clear. And I hope that's not lost on anyone today, that there's a lot of upside from this point, but it's hard to really see the downside. And with that, Jane, I'll hand it back to you.
Thanks for that, Phil. We've had a couple of questions come through, and I know you have covered them, but I'll jump into them anyway. And if shareholders do have any further questions, please use the Q&A function at the bottom of your screen. What has been the delay with the results from the drilling, and when can shareholders expect results to be coming through?
Yeah, look, from joining, I was always earmarking towards the end of February for results. So we should be more or less around there, early March now. The drilling started at the southern end where the artisanal workings, there's some cavities, some ground issues we had to manage through. The lab in Mali is very busy, and so that's why I've been able to come on board online today to articulate that. We're in a position now where the rig will deliver regular results. We're on day and night shift And we've got an arrangement with the SGS lab in Bamako that we're going to see timely turnover of those results. So thanks for your patience, but it is coming now, and you'll see it regularly for a few months.
Thanks, Phil. Just on strategic interests. So how do you manage strategic interests when the market cap is sort of where it is at the moment?
Yeah, good question. Thanks, Jane. I think, that's one part of our job here is to manage that corporate interest. This project has been flying under the radar, and as it gets more market profile, those interests are naturally going to come. It's not unreasonable to expect that strategics will be knocking on our door wanting to understand the size of the prize, but we certainly don't want to be giving away the company too cheaply in that work stream. So we'll be sensible about it in terms of what we can and can't do, but it's our job to get our market cap up as quick as we can, because as the profile increases, so will the corporate interest.
Thank you. And I know you've covered this in the presentation and even more so with the questions, but so what should shareholders look forward to over the coming 3 to 6 months? And probably even more so, what are you most excited about?
Yeah, so to wrap up, and it's the drilling program here. You'll see over the coming weeks those holes at Kabata North and along that main Kabata shear will come out, will be released, and then it's Gosso and Kabata East results over the next 6, 7, 8 weeks. So I'd be focused on that principally. I think that is where we'll get the most value for our share price.
Wonderful. Well, thanks for your time, Phil, and thank you all for joining us. If we have missed any of your questions, please feel free to reach out via the contact details on the bottom of our ASX releases. But we thank you for your time.
Thanks a lot.